Where does it come from?
Is that Animal House?
Yes, very good. Otis Day and the Nights.
That's right.
Let's hit it.
Yeah, that's right. That's good.
Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and Robert Schiff of RPM Mortgage. When we cut to the second commercial break, we ask this trivia question. Again, the theme is men who played women or vice versa. This is a vice versa one. In the movie Shakespeare in Love, she sometimes pretended to be a man. Who was this actress? Anyone?
Maybe
Gwyneth
Gwyneth
Paltrow.
Paltrow. Very good, guys. All right. We're going to get right into email time here. And Robert, we have a question for you. When you meet a new client, do you take a deposit to start the refinance project? This must be from someone who's ready to call you.
Well, that's a good question. I don't, and even more than that, legally, mortgage brokers are not allowed to take upfront money from people.
And why is that?
There was one of the things that happened after the default swaps and turned the market completely. There were so many abuses that the government came in and said, we have regulations now, and if you're looking to borrow money, you go to someone and they are not allowed to have you pay them money until the process is started, until you can see clearly, you get disclosures from them and find out exactly what the terms of the mortgage they're offering you.
Yeah, because at some point, you could be going through the process, and they could be wasting your time.
Yes. Now the banks can still say we want an upfront fee, which will cover the appraisal, and if you don't go through with it, then they keep the money.
Well, no. So when they go through you, and you start going through the process,
I tell people if they come to me, the only money they're going to spend until the loan is done is money for the appraisal, and that'll only happen on almost all cases after they're disclosed, and we go over all the terms of what they're going to get and what they're looking at and what the costs are going to be.
And I think that's a great idea too, because there have been a lot of abuses. I know that there's still lenders out there that will charge you like a legal fee deposit, or maybe they'll send you a letter of interest and say if you want to proceed, you have to send a quote legal fee deposit or something like that. And really, it's I just think that's nuts.
well, it's too many scams out there.
Yeah, you always get the call. This is emergency. You need to call this number by the end of the day and deposit $500 to secure your. Well, we're not even sure what it secures, but no, the answer is there's no upfront deposit at all.
Okay, good. Mark, we received an email for you here that says, here's a question. Do you have any success stories about one of your clients foreclosing on a loan? Now, you have to explain what that question means. It's obviously someone who's familiar with your company.
Right, for new listeners, my name is Mark Hanf. I'm president of Pacific Private Money Loans. We are a private money mortgage broker, meaning that not only do I have borrower clients who are mostly real estate investors, that's the niche market we serve, but I also have lender clients, individual folks like you listeners out there with self-directed IRAs or savings accounts. However you invest your savings, there is an investment market known as trust deed investing, is what it's more generally called, and that's when you fund a loan secured by real estate, secured by a recorded deed of trust, hence the term trust deed investing. Again, these loans are generally here in the Bay Area, definitely in California, but mostly in the Bay Area, secured by real estate. These are short-term loans to real estate investors, many of whom may be buying property to fix and flip, so maybe it's a one-year loan, or we do have 2- and 3-year products, but generally short-term, you're not tying up your money for a long length of time. So the question was, well, what about the default rate? Has any interesting stories on the default side of things? Well, first of all, what's really interesting is that historically, a private money loan, which used to be called a hard money loan, it's kind of the softer, easier, more PC name for it today is a private money loan, but it used to be called a hard money loan. And hard money loans back in the day used to have a fairly significant default rate, 5%, sometimes higher, and if that loan is well secured, a default is not necessarily a bad thing. It just really means that, well, you're not receiving interest payments during the period of default. If you file default and go to foreclose on the property, you in theory could end up owning that property and making a much better return on your initial investment. But nowadays, most of my investors are really not interested in loaning to own, as it's sometimes called in our business. They really want to invest in this secured product, receive their 8 or 9%, sometimes 10% monthly interest yield. It's an annualized rate, but you get your interest monthly. And they don't want to have to foreclose on the property. But we did a loan 2 years ago to a gentleman, and this was a well-secured loan. He owned rental property here in the Bay Area. He wanted a cash-out loan. There was an appraisal on the property. We made him a loan equal to 60% of the value. Well, that guy promptly, within 30 days of us funding that loan, don't know what he did with the money, but he ended up getting arrested. Apparently he was running a Ponzi scheme in another venue of his life. He was collecting money from people, promising high returns. Now, the loan we made to him was a legitimate secured loan, so my investor was not at risk. But as the borrower was in jail, he didn't make any loan payments. So immediately...
Well, wait, that's no excuse. Just because he's in jail, give him a checkbook and start writing checks.
Right.
Just had to find another job while he was in jail.
Yeah, exactly.
So he missed his first payment. 30 days after the first payment, my lender instructed us to file a notice of default, which we did. That triggered the default rate of interest. So the interest that he was receiving, which was 10%, now was 14% because we have a 4% spread in the default rate of interest.
But he hadn't received it yet because...
He hadn't received it yet,
Yeah, it
right.
was just accruing at
So
this point.
it's accruing at that point, and late fees were accruing. So the story ended up with a happy ending because the property was put up for sale by someone, a relative, and it actually was sold within 6 months. And the happy ending for my investor was that when we put in for the payoff on that loan, known as a reconveyance, we put in for the accrued interest at the default rate, the late fees, as well as getting reimbursed for the $2,500 he was out of pocket to file the foreclosure, which we paid a third party to do that. So he got all his money back. He ended up making an annualized rate of return of over 16% for that investment. And because he was a fairly seasoned investor, he never broke a sweat.
Yeah, I was going to say, because that's almost like that's the worst news is
So,
the best news.
so now he's asking if you have any properties that might go into default.
Yeah, are there any guys who are about to go to jail that you can let them borrow?
Mark, is my understanding correct? If that had gone through and he had foreclosed, then he would own the entire property where...
That's 60%.
Where for 60% of its value.
Well, he would either own the property, or what happens is when you foreclose on a property, let's say there is a lot of equity, when it goes to the courthouse steps, known as the trustee's sale, you actually have to post a price, and that price would be equal to everything you're legitimately entitled to receive. So that could include late fees and default interest, etc. So it's possible, if there were sufficient equity, that a real estate investor would bid at the courthouse steps and buy that property. So you'd still get everything you were entitled to, but you wouldn't necessarily be guaranteed to own that property. So again, not necessarily a bad thing. You're getting cash. You don't end up having to take over possession of the property and maybe repair it or reposition it for resale. But
Okay, so in his case, if it would have just been normal, he would have received 10%.
Yes.
But because it went into bad territory, he ended up getting a 16% annualized
Wow.
yield.
Well,
Not
again,
too shabby.
we were talking about bonds earlier. I mean that's one of the unique features of trustee secured loans or note investments, is that it's financing. It's not really, I mean, we call them a trustee investment, but technically it's not investing. You're really lending your money out, and the hallmark of lending is security and insurability. Whereas if you buy, say, common stock, even if you buy from Apple, and Apple's a pretty strong company, it's not guaranteed nor is it secured, so that value can still go down.
Sure.
There's not a whole lot you can do, whereas in, well, of course we know real estate can go down, but
Yeah.
we'd like to think that the air's been let out of that tire and we're not going to see a whole lot more, and of course we'll be talking a little
So
bit about
tell the
that.
listeners, how do they get a hold of you if they want to get a decent yield? We can't promise them 16% because you never know if the loan's going to go into default.
No, I don't typically promise 16%, although we are, there are some creative products that some of my more sophisticated lenders like to do, and of course anybody interested in learning how you can lend your money in a secured position and make even higher than 10%, I'd love to talk about it. But my bread and butter, the most safe, the ones with the most safety and security features are first position loans. And no more than 65% loan to today's value. And anyway, you can go to my website, which is Pacific Private Investments, plural.com. That will give you information on trustee investing, pacificprivateinvestments.com, or of course go to the radio station's website, thebestofinvesting.com.
Very good. And Robert, how do people get a hold of you if they don't want to give you a deposit?
Oh, they won't give me a deposit. The best way is to call my cell phone, which is always attached to my hip, or unless I'm talking on it, which is 415-515-1941. And also you can check out the RPM website and go to RPM website and look for Robert Schiff.
That's revolutions per minute.
That's
Okay.
what it is.
We're going to cut to our third commercial break, and here's the final trivia question. This actor played Edna Turnblad, the mother of Tracy, the main character in this 2007 musical Hairspray. Who was he? In fact, I didn't even know this until someone actually pointed out to
A
me.
musical, really?
That's right, musical Hairspray. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Again, their website is lighthouse4fun.com, and that's the number 4. We'll be right back.
Was that expected or better than expected?
GDP of America is
Right about in line.
something like 30% of the GDP for the entire world. It's bigger than China and Japan and some other countries put together.
Kind of interesting trivia. I was talking about low interest rates and the Fed fund rates.
Yeah.
What do you think the highest rates peaked in 1981? Where was Fed fund rates then?
16.
16?
I think so.
Well, wait a minute.
19.
I was going to say that the prime one got
the
up to
overnight?
20 3/4.
So
That
the
part I
overnight-
remember.
I'll never forget this woman built a spec house and was trying to sell it, and I walked in on her first open house and she was telling this client, and the really good thing about this house is there's a mortgage that's assumable for only 17.5%.
That's amazing.
When I got a
Oh my gosh.
when interest rates, industrial bond financing at 7 3/4 because interest rates were normally 13%. I go, man, I got to.
I remember when that was free money, you know, it was like 7%.
Yeah.
Oh, yeah, I remember, I was a realtor. and
We
they
got-
came
talk
down
about
below
advanced-
13%.
Yeah, when talking about advanced fees, we got burned for 20 grand by a guy who came into our office and smooth talked us out of deposits for loans secured by Chinese money coming in at 7% back in the early 80s when the rates were like through the roof and
Held by
inflation
the
was
Bank of
12%.
Helsinki.
Yeah, right. He was so convincing that
Wow.
my dad literally wrote a check right then and there for $20,000, you know,
Oh.
Well, I
good
had
faith deposit and
hate
Money
that
never
stuff. I
came.
hate that stuff.
Yeah.
There was a guy who came to us for a loan one time. He just showed up at the doorstep. It was the
Yeah.
funniest thing. He just shows up and you go, "Do you have an appointment?" I mean, not that we needed one, but
Right.
he goes, "Nope." He goes, I heard about you guys, and I'd like a loan for $3 million. And we said, "Okay," because we
never-
do
you
we
never
do
know
that
so far.
Right? So I think my
Might be the
ears
bag
are-
man, right?
I'm interested, right? He says, and here I've got $100 million portfolio.
Oh,
100 million.
100 million, okay.
And so, you know, I'm kind of looking through the papers, and I'm getting a little suspicious to begin with, right? And so we're talking, and he's explaining how he needs the money for such and such. And I said, okay, just so you know that we do, and I said, we always get, you know, personal guarantees. I said, oh, no, I can't personally guarantee, I won't personally guarantee it. I said, really? You got $3 million against $100 million. I said, I mean, come on, you of course you'd personally guarantee this. You wouldn't want to lose this problem. No, I can't do that. I said, see ya. I go, we ain't gonna make it that kind of loan. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and Robert Schiff of RPM Mortgage. When we cut to the third and final commercial break, we asked this trivia question. This actor played Edna Turnblad, the mother of Tracy, the main character in this 2007 musical Hairspray. Who was he?
Went a long way to be Edna's mom from Greece.
That's true.
So it was
John
John
Travolta. That is
Indeed.
correct. Mark, what is going on with real estate? I know you got some good tidbits for us.
Well, yeah, we like to do the story behind the story, and the headline, headlines, if it bleeds, it leads. Well, the headline for last week was that February home prices were down 4.5% year over year. Ooh, more bad real estate news. But that the news behind that is that depreciation devaluation in real estate largely happened last year. That was really the fourth quarter of 2011. There was a remarkable decrease in both demand and pricing, but that was it. That was the bottom of the market. I mean, we have seen month over month, January, February, into March, prices are actually going up. So the trend is today, prices are going up. In fact, everybody I talk to tells me that there is a lack of supply, a lack of inventory out there, and homes on the market right now are being listed and getting multiple offers above asking. I'm even seeing that in my own neighborhood in Novato, where homes on the market last year at this time were languishing with no offers. Now every home that goes on the market has a sale pending sign literally within a week.
But they're priced right.
They're
though.
priced right.
They're priced they're priced correctly, but they're priced exactly where they were priced a year ago. That's the whole point.
And 20 years ago.
Yeah. So we've got so most people are or should say many folks in the business are predicting that we've seen the bottom, that we are in a price recovery. The banks are helping by not releasing a lot of REO inventory right now, so they're in many ways they're trying to create a recovery. And so people might ask, well, what about all the shadow inventory out there? But I think that they've demonstrated, the banks have demonstrated that they have a plan.
Yeah, they're not just dumping it.
They're not going to dump non-performing real estate assets on the market. So I don't foresee in my crystal ball, for as bright as that is, a triple dip. We had a dip in 09 and another dip in 11. I don't see another one forthcoming. I think we've learned the lessons of how to deal with this situation, and I think real estate's still priced so far below replacement cost that I think we're pretty safe to bet that is, at least in the short term, that we're probably have hit bottom, and we're looking ahead to go, okay, now where do we go from here?
Okay.